traders and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Shares in LVMH surge as the world's largest luxury group shows better than expected resilience to a slowdown gripping the sector. Markets price in rate cuts for the euro area as early as April, despite the ECB President Christine Lagarde indicating they likely will not come until the summer. Plus, Apple opens up. Customers in the EU will be allowed to download software from outside its app store for the first time ever. It comes ahead of a round of new antitrust laws. Well, let's take a look at the European markets map. Now, there is quite a lot going on. Intel shares actually dropping some 12% pre-market. LVMH shares significantly higher. Now, European stocks overall seem to be bucking the trend. They're actually rising today. They're certainly bucking weakness in U.S. equity futures. And this is after LVMH, the world's largest luxury retailer, showed that spending amongst the wealthiest consumers remain resilient. In fact, LVMH gaining some 8.7%, and that's giving a nice little lift to some of the other luxury makers. Also, Rémy Cointreau shares getting a boost from a planned cost cut after sales fell by almost one quarter over the latest 3 months, with drinkers in China joining U.S. consumers in buying less of its pricey cognac. Now, to talk about all of the markets, so we're now joined by Bloomberg's Justina Lee. Justina, thank you so much for joining us. There's a lot of currency moves. There's a lot of focus, of course, on the ECB and inflation. So Janet Yellen says, look, inflation in the U.S. is in control and consumers will start feeling it.
Yeah, it's pretty interesting. So it seems like traders really kind of like zoomed in into the point that, you know, the ECB seems to be acknowledging that the price pressures are no longer as elevated, which is kind of something everybody already knew. But I think that really gave traders a lot of optimism to price in rate cuts even earlier. But I think it's almost a bit of a surprise, because if you look at what a lot of ECB officials are saying, they're still saying we need to be vigilant about inflation. So if anything, they're leaning into kind of holding rates for longer, but traders are just not listening to that.
Yeah, I mean, the ECB side is very, very clear. I mean, Christine Lagarde was very clear in Davos with us last week. She was very clear in the press conference. And again, the pricing, you know, keeps on putting these rate cuts earlier than she said.
Right. And that's why we've kind of seen a big drop in, like, you know, bond yields in Europe and also weaker euro. And of course, in the U.S., there's sort of a similar story going on, in that I think Fed officials also want to signal that maybe rate cuts will not be as aggressive as traders are now expecting. And traders are also not listening. But I think generally markets are still expecting the Fed to go first.
Yeah. What are you looking for afterwards? I mean, I guess there's a concern that inflation comes down and then shoots back up by a touch in the summer. Or how will central banks deal with that?
Yeah, and I think that's why they're becoming, you know, a lot more vigilant, and they don't really want to make the mistake of kind of cutting too early. But I think, you know, they're kind of weighing those risks, but also the fact that it seems like on the demand side, the picture is slowing. I mean, we're definitely kind of seeing that in the European PMI numbers, maybe a little bit less so in the U.S., but they've definitely got to weigh kind of those supply side inflationary risk with the risk that, I mean, monetary policy acts with a lag, right? So when are we going to see that serious tightening?
Justina, is there anything else you're looking at? I know that there's been quite a lot of talk, of course, on some of these stocks. Intel down, you know, quite significantly in pre-market. LVMH going up. Is a lot of the focus going to be on sector-specific and earnings?
Right, exactly. I mean, that always happens in earnings season. And I think generally this earnings season has been, you know, pretty solid, which might be a surprise kind of after a year of monetary tightening. And we're kind of seeing like mixed signals from different, you know, parts of the market. I think earlier we kind of got some good news about semiconductors, but maybe some bad news from Intel overnight. And I think apart from that, I think everyone definitely is watching China, right? I mean, it seems like there could be more aggressive stimulus coming out of China, but we're still waiting.
Justina, thank you so much. Justina Lee there stays with us. Now, for more on the ECB's path to cutting rates this year, let's also get to our correspondent, Maria Tadeo, who's in Riga, Latvia, with a guest. Hi, Maria.
Yes, Francine, good morning. And obviously we're in Riga. There's a central banking conference taking place. And on that note, we are joined by Croatia's head of National Central Bank, Boris Vujčić. Thank you so much for joining us. Yesterday we were in Frankfurt. Today we're in Riga. Some of the takeaway from that press conference for some is that the ECB took a dovish tilt yesterday. Was there a dovish tilt yesterday?
No, I don't think it was dovish. It nicely reflected the discussion that we had in the 2 days on Wednesday and Thursday, and nothing really dovish out of it. But lately I have a feeling that markets take whatever you say as being dovish, being very trigger happy.
But that's a very good point that you make, because some believed, and I wonder what you think of this, because you just said no, there was no dovish tilt yesterday, but some believe, because the head of the ECB didn't fully rule out or deny April, that she kept it on the table for potentially a move. You don't see it that way.
No, I think that what she said, and this is exactly something that if you are data dependent, you will always say, is that you are data dependent, not date dependent. So you're not going to discuss the date as such, but you will be guided with the incoming data and 3 principles that we have laid down much earlier that we'll look at and that will determine our next rate move whenever it comes.
And I don't want to get caught up in the dates, as you say, it's about the data, but I wonder technically, will you have enough data to make a decision come April, or actually do you say, guys, calm down, we may need the full first half? There's a lot of data that we need to digest, and that means June.
We need the patience at the moment to get enough data to be confident that the inflation is really firmly, sustainably on the way towards our medium-term target, and that will come gradually. That will come over every month. We also said that the important data that we still lack are the ones on the wages, because the supply shocks have not been important recently anymore, as the effects have largely dissipated. So we still have the strong domestic inflation, which is tied to the wage developments, still strong labor market. And these are the things that we will need time to see and then decide what's going on.
And do you have a calendar in mind, or actually your mind at this point is open? And on that note, by the way, some say if you cut early, let's say April, I know you've said you're not clear that is going to be the month, but some say an early cut will not fix the fundamental issues going on with the economy, if you believe it's softer, and may undo some of the work on fighting inflation. So is that what you think too, that an early cut, is there a point of going too soon, too early to help the economy, perhaps, if you believe inflation is on target?
What we're seeing is that we do have a disinflation process nicely developing. We also have the economy, which has not gone into a recession. We do still have a risk of a technical recession, but not a real deep recession.
So
it's more of a stagnation, and then we do see also the signs of a possible recovery coming later this year. So nothing to be much worried about at the moment. And we also see the transmission of our monetary policy in the markets is running smoothly, and we see also that the markets overall are running smoothly. So overall, I would say it's a good picture, the picture that we like to see at the moment, but we still have to wait for more data and to see how the things will develop over the next months.
You say that markets are running smoothly, but they seem to be, to some extent, running also ahead of you. Do you feel pressured in any way by the chit-chat in markets?
Well, the fact that they are running ahead of us means that the financial conditions got softer earlier. So you do have already that effect, both in the curves, in the yield curves, and you have that also effect in the banking market, both on the asset and liability side. You see the anticipation of the bankers and the way they price both the liability and asset side of their balance sheets. This is something that is there, and I don't take a view on that. Markets are always there to price, and sometimes they're right, sometimes they're wrong. Okay,
that's in the market pricing, but do you take a view on anything that the Fed may do? I know you also say we're not Fed dependent, we're data dependent, but some believe maybe the ECB will go first. Whatever the Fed does may condition what you do. Do you feel there's a correlation there?
No, I think we should look at our European data and make our own decisions. And at the moment, you've seen that you had also significantly stronger growth in the U.S. in the fourth quarter than we've seen in Europe. So it's not also that the two economies are evolving at the moment in the same direction at the same pace.
And sir, when you do cut, is there a possibility, just to almost try to understand where this debate is going, forget about the date, but is there a possibility where you say we cut late, but we go bigger? Or is that something that you still haven't even contemplated?
This is also a possibility.
The magnitude may matter more than the timing, basically.
This is also a possibility. Ideally, you would like to see the 25 basis points cuts when they start, but there's always a possibility.
To absorb or
yeah, this is a smoother way of running a monetary policy, but of course there is always a possibility of doing more if warranted by the data.
Okay, and then I have to ask you, yesterday the head of the ECB spoke about a survey that leaked. I'm sure you've seen the survey. I'm sure you've seen the results internally. And she said that for the most part she feels she works well at the ECB. And she said almost, don't look at me personally, I'm irrelevant. What matters is the results that we do. What are your views on the head of the ECB? I know you saw her yesterday. Are you happy with the way things are being run?
I can speak of how the Governing Council works, and the Governing Council works really smoothly, and she is a good chair of the Governing Council. I did not see any problems in terms of how the Governing Council operates, and I'm very happy with that.
And economists, do you think at times they're a little bit too cliquey? It can be a tribe? Or, you know, it's normal. You don't feel like you're a tribe.
I don't feel like being a tribal guy, but I think every profession has its own firm views on some things, and that's nothing special about the economists.
And sir, just a final question. When you look at basically the medium term, what do you think is the biggest risk? You know, some say ultimately for the ECB, it's always this tension about, do we wait because we think that's going to be better? Do we wait too much that it becomes detrimental? What is more dangerous to you at this point? Because you're going to have to make big decisions this year. That you wait and that hurts the euro area, or that you go too soon and then undoes what you've done?
I don't see at the moment much of the damage that we can do to the European economy given where it is. And it's better to be safe on the side of the inflation developments, and that we are firmly convinced that the inflation rate is coming down towards our medium-term target before we move. I think there's more risk in moving too early and then, you know, seeing that the developments, inflation developments are going the way that we did not expect.
Of course, and it was obviously a long process for the European Central Bank, and many ramifications too, not just for monetary policy, but also socially, that it had this idea of inflation. So, well, sir, thank you so much for joining us in Riga. I know we're going to do a panel very shortly, so we'll get more from you. Appreciate. Thank you so much for your time, as always.
Thank you.
And Francine, that was, of course, Governor Vujčić, head of Croatia's National Central Bank.
Maria, thank you so much. Always with the great questions, Maria, and also with a little bit of humor. So I don't know if we're a tribe or not, but you can definitely be in my tribe, Maria, today, speaking exclusively to the Croatian National Bank Governor. We're also looking at, of course, some news from some of the companies that have reported or that have news out there. Intel pre-market down 12%. We'll have a full roundup of what that means after sales forecast trailed estimates. On the upside, LVMH is actually, better than expected. So that's giving a nice little lift to the CAC 40 in France. Much more to come. This is Bloomberg. Welcome back, everyone. Now joining us to talk more about the currencies after Maria's great interview is Ozan Tarman, Vice Chair of Global Macro at Deutsche Bank, and still with us, Bloomberg's Justina Lee. And Justina, we're talking a little bit about some of the market forces and why markets, Ozan, keep on pushing back. They just don't believe when central bankers say, "Look, we're going to be cautious." They're saying, "Cut, cut, cut." Like, where do why this mismatch?
It's a pleasure to be here, Francine. I mean, you did a great job last week in Davos, right? You made Madame Lagarde almost say the summer word, but the moment she mentions summer, market starts pricing in April more. At the moment, soft landing camp is winning. That's why market keeps pushing these central banks, Fed towards March, maybe, ECB definitely towards April, because at the root of it, it seems that supply side was the main cause of inflation. Even though we hiked interest rates 400 basis points, 500 basis points, we're not getting the recession. No. That shows that the guys who relied on supply side for the reason for inflation is winning. No. That's why markets are pushing for risk higher rates, lower trades.
But Ozan, I mean, the other thing that was very clear is that I guess that there's a fear among central banks that actually they cut and then have to raise quickly afterwards. How do you see inflation? There's so many different factions and so many, I guess, forces that could lead to a crisis. How do you see inflation behaving from now until the end of the year?
The Burns moment, that's what they're afraid of. I think we will be able to avoid it. In US, PC in just a few hours is very, very important. The key trend that Fed is watching, it's on the right path. Our call is Matt Luzetti and team. Because inflation may be a little bit sticky for the first half of the year, the cuts will come in June. If PC and CPI works in Fed's favor in the next two prints, even in March, the moment market price is in 17.5, 20, they will make Powell go. ECB, Lane said it, right? Wages. They're watching wages very carefully, but also Madame Lagarde just yesterday said it's not only wages. So she gave a bit of a room there for a wiggle for April. Markets will keep pushing.
Yeah, markets will keep pushing. And then just, there's all these questions about China, right? So we know that they're going to move some of the credit or actually push some of the money into sectors in the economy that they want to support. Do we still, do you have a clear strategy on whether China will grow and be a force for good for the world economy?
Yeah, I think that's really a tough question now because a lot of the challenges China's grappling with at the moment are a bit more structural and harder to deal with. I mean, we're talking about, total loss of confidence in the real estate market, which is kind of driven by some demographic changes that seem kind of impossible to reverse at the moment. And so I think that is something that investors have really kind of focused on. And kind of with the amount of disappointment, after so many calls of like, this is finally the bottom for China. And I think people are a lot more careful about going back in.
Yeah, and I wonder, Ozan, whether you can read, we had Intel pre-market down quite significantly, LVMH up quite significantly, whether this is market expectation or also gives you, more of a view on macro, some of the forces at play here.
Well, a lot of the hedge funds are looking for this anti-risk parity trade, which is rates higher, equities lower. They almost had it on the first and third weeks of this year. This time around, maybe we had a great start to the week. We may end on the weak tone because of Intel, because of worries of big Mac 7 tech earnings next week. We may end on the shaky grounds. But as long as I'm right about the Fed call, I think dips will continue to be bought. And Justina is very right about China. A little bit over pessimism, right? Yeah. Last year, this time, when I did the macro roundtables around the world, people loved the rest of the world, China bullish, European bullish. This time around, just the exact opposite. People are very pessimistic about China, very pessimistic about Europe. One popular trade is to be short euro pound. Our island, pound is one of the favorite currencies. I understand why this is all about, but I would be a little bit careful when everybody is so pessimistic on both China and Europe.
I mean, one thing that we don't talk a lot about is debt, basically, that all G7 countries and the US are going more and more into debt. When does it start playing out in your macro view?
Already a factor, right? These auctions are being watched like almost emerging market of here. Yeah, you said it. This week, 5-year auction didn't go too well. Last year, 30-year was a big deal. It is a big factor. QRA, you knew about those words. QRA is the reason why in beginning of August, we started selling off. Then supply in beginning of November, less supply than expected through Ms. Yellen. And we rallied. Very important data next week, February 1st, the new QRA announcement. What we get there will be very key. Our Zhang, Raskin and team expect them to do a little bit less issuance on 10-year. That can still help the 10 years rally a little bit more from here. On the currencies, our head of FX strategy, my partner George Severos, had a good call. For the moment, tactically, long dollar, at least against the euro, is working. Why? First of all, because of Fed. It's not too clear that Powell cuts in March. Madame Lagarde is pushed for April. That's one. And then Trump, right? Trump is in everybody's minds.
That's a whole other show, Ozan.
Lightizer, watch that out.
Yeah, we'll get you on and do like 3 hours on what Trump 2.0 could mean for the world economy. Ozan Tarman there, Vice Chair of Global Macro at Deutsche Bank. Also the first time on TV, so I think it's the first time with me, and I hope there's many more. And Bloomberg's Justina Lee, thank you as always. Coming up, Apple making sweeping changes to its App Store to try and avoid the crosshairs of the European Union. We explain what it means for customers and what it means for the company next. This is Bloomberg. So two big tech stories we're watching this morning, Apple and Intel. Let's start with Intel, given first quarter forecast that is much weaker than expected, and actually pre-market it's getting slammed, 12% lower. We'll also talk about Apple because this is a huge overhaul of its app store, especially to basically placate the European Union. That's in a second. Intel, Matt Bloxham, the one and only Matt Bloxham, who makes me smart about all things tech. Intel plunging. Like, what's the problem with Intel?
Well, it's just this kind of sluggish rebound in demand. As you said, their kind of Q1 forecast, an 11% miss versus where consensus was. So people are expecting kind of much stronger momentum picking up. I think actually they surprised on the upside in the kind of the Q4 results they reported, particularly on PC, which has been soft and there's been a lot of inventory there. That seems to be coming back, but there's kind of not quite the seasonal rebound people are expecting, and they're facing a lot more competition in data centers.
So I'll ask you, Matt, whether they can make a comeback bid. We'll talk more Intel and Apple next with Matt. This is Bloomberg. Now, shares in LVMH surge as the world's largest luxury group shows that better than expected resilience to a slowdown gripping the sector. Markets price in rate cuts for the euro area as early as April, despite ECB President Christine Lagarde indicating they likely will not come until the summer. Plus, Apple opens up. Customers in the EU will be allowed to download software from outside its app store for the first time ever. It comes ahead of a round of new antitrust laws. So good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we were talking a little bit about Intel, but now let's talk about Apple embarking on this historic overhaul of its Apple Store operating system and web browser in the European Union, really aiming to placate regulators set to impose tough new antitrust rules. Now, still with us, Matt Bloxham from Bloomberg Intelligence. Matt, I mean, this for me is a huge deal. Yeah. I know you told me, look, it's a long time coming, but explain to us, what happens after this? Is there going to be more change, and why are they doing it?
Yeah, like I say, it's a long time coming, but it is a big deal, and this is probably actually only the start of the story rather than the end, because Apple is being very vocal about it's making huge changes. Going to be a real big threat to consumers' safety and security online, and they take the consumer experience really importantly in their kind of proposition. Then you've got people like Epic Games, who they've been tussling with in the US, saying they're not going far enough and they need to do more. And the EU is currently in the middle saying, well, we'll look at what they're proposing and see whether it's compliant with this new act. Could potentially, impact Apple's revenues by billions of dollars, but which is actually only a few percentage points at best. So maybe small, but then if the EU gets traction with this, maybe some other international regulators look to do a copycat policy, and suddenly it becomes a kind of a global issue, not just a kind of regional issue.
So Matt, what does it mean? So if I want to download, a new app that I want to use, which means that I don't need to go to the App Store and I can go onto something else.
Exactly. So there will now be rival app stores so you'll have to have an app for the rival app store on your phone. So, for example, Epic have said that they're going to have their own app store for their games. So if you want Epic Games, sometime in 2024, you'll go to their app store. Microsoft have said that they will look to develop their own app store too. So for Microsoft products, you'll be able to get them from that store. So you'll end up with multiple apps for apps on your phone, which could be quite confusing for consumers. And you don't know as a consumer whether you're getting the same safeguards and security around those apps as you would from the app store. And that's one of the big points that Apple's making. Beyond that, there are differences around the payment systems. Obviously, right now, you tap and pay with the Apple Pay platform. They're opening up that technology. So rival banks, for example, could have their own tap and pay. So maybe you could go with Amex or MasterCard, for example, instead of the Apple Pay platform. The other thing is the web browser. So right now the default web browser on your iPhone is Safari. You'll get a choice now to choose a different default, for example, Google Chrome as your default browser.
And Matt, this is the European Union, because basically they're trying to not be slapped down by the EU Commission. Does it automatically at some point go to the US, or you could have two completely different systems?
Completely different. Every jurisdiction has its own approach on antitrust. Normally with antitrust, it's kind of ex post after the fact. But this is kind of a preemptive move to try to kind of control all of these tech giants in one foul swoop. There's also been some tussles in the US, Apple versus Epic, all sorts of things like that. So they'll have their own approach. Maybe some aspects of it will mimic what's going on in Europe, but it's not going to be exactly the same in any way, shape or form.
Big story. Matt, thank you so much. As always, Matt Bloxham there from Bloomberg Intelligence, our expert on Apple and all things tech. Now, luxury stocks and drinks makers are some of the biggest risers this morning in Europe after LVMH beat expectations despite a broader slowdown across the sector. Well, Bloomberg Intelligence says the bright spots for the company were fashion, leather, wine, and spirits. So let's discuss this with Aurelie Husson-Dumoutier, a global consumer and retail analyst at HSBC. Aurelie, thank you so much for joining us. I mean, LVMH beat expectations, but certainly they've also given a little bit of a spring in the step to investors that were worried about the luxury sector as a whole. Why have they surprised on the upside?
Well, thank you very much for having me. I think that what the markets are welcoming today mostly is the tone of the CEO, Bernard Arnault, for 2024, when he said he was very confident, that he believed that that the US will be helped by, because it's an election year, will be helped in terms of growth, and that the prospects of interest rates coming down is going to also help the sector. So that's definitely some relief on the space where there was some worries. I believe that market is also welcoming the performance of the wine and spirits division, which has been a drag for the entire year 2024 and 2023, and for 2024 they are seeing the end of the tunnel in the US and also in China, and that definitely is a relief as well.
Yeah. Aurelie, in general, how are you expecting 2024 to be for luxury companies? So I guess if you have desirables, so the desirable bags or drinks that people want to buy, is it still going to be a shock after the surge of post-pandemic luxury good buying?
Well, at HSBC, we expect 8% growth for the luxury sector, which is probably a bit more than some of the other brokers. We expect the growth to be driven by Asia, ex-Japan and ex-China, and also by Japan. So definitely growth coming from Asia and a growth coming also from Chinese travelers.
What does it mean for example, cost control? I mean, if LVMH has quite a lot of rivals around the world, are you expecting LVMH to be stronger than some of the other ones?
Well, LVMH has been very clear in saying that they're going to defend the margin at the current levels. So we don't expect at HSBC any margin improvement. We don't expect any margin decline. But once again, we expect 8% growth, which in the end is not that decent. It's not that bad, I would say. It's pretty decent. What I wanted also to flag is that, of course, there's a relief right now, but I wanted to point out that there is a big gap between the growth that we expect in H1 and the growth that we expect in H2 because of the comparison base. So the prospects of Q1 are pretty weak. We expect only 2% growth for the sector in Q1 and also in Q2. It's only in H2 that you should see some return to double-digit growth. So mind the gap, and this is why, even though there is some relief, we definitely say to investors that the sector should not outperform before 2 or 3 months. That is to say, before H2 prospects are in sight.
Aurelie, what do you expect in terms of cost controls? So this, I guess, is a conundrum for big groups like LVMH, who have had wonderful customer experience, which also draws in a crowd. But at the same time, I know they've tried to keep costs down to make up for this, very, very modest slowdown.
We expect cost control to remain present in 2024 in order to maintain margins.
Is there anything else that you should be looking out for? I don't know whether, if you look at Moncler and some of the others, the Kerings, is it cost cuts that will get them through this?
What we have learned so far with the companies that have published, that is to say Burberry, Richemont and LVMH, is that brand power is really key, and that we expect the companies with the strongest brand power to continue to outperform the weaker one. And that was the polarization that started a few years pre-COVID and should continue. So we believe that bodes pretty well for Hermès, which is due to report numbers on the 9th of February.
Aurelie, it also seems like it's a national obsession to try and understand, of course, how the heirs at LVMH, who will take over to what. Can you give us a sense of what you're expecting in terms of succession plan and whether that changes actually your outlook for LVMH?
We don't, in terms of succession, of course, we don't know what LVMH is prepared to do, but we can definitely say that Mr. Arnault said yesterday that he was not about to leave, and that I'm sure he's going to put someone in charge who's going to continue to deliver a very strong performance, whoever it is.
Aurelie, whoever it is, thank you so much for your time today. That was a great insight from Aurelie Husson-Dumoutier, their global consumer and retail analyst at HSBC. Coming up, the US and UK impose sanctions on senior Houthis as a militant group continues its attacks on vessels in the Red Sea. That's coming up next, and this is Bloomberg. The US and the UK have imposed sanctions on 4 senior Houthi militants as the Iran-backed group continues its attacks on vessels passing through the Red Sea. Well, joining us now is Bloomberg's Mark Champion. Mark, there's a lot to talk about, and I don't know whether you're seeing a little bit of a status quo. I know we'll talk about the politics and, of course, some of the calls, for example, for Prime Minister Netanyahu to step down. But how do you see the Red Sea and these extra sanctions?
Well, we're really stuck. The sanctions won't change anything, I'm quite sure. These kinds of groups, they almost see sanctions as like a badge of honor. And I'm sure they'll have some impact. They, may go after their assets, private assets and so on, if they have them. I don't know the details, but they're very unlikely to change behavior, and the U.S. will know it. They're trying to, escalate the price that the Houthis pay, but they don't show any sign of backing down, which is a real problem for global trade and for the global economy.
Mark, one of the things that you wrote as our columnist also on Middle East affairs is something that you wrote last week, which says don't confuse Prime Minister Netanyahu's interest with Israel's. Are there more calls for him to step down, and will anything happen?
Well, there are. There is it's a fairly politically polarized society. There's unity around dealing with Hamas, but otherwise it's a polarized society. He is not popular, and there are calls for him to step down. In general, within the kind of the elite that matters, that will make these kinds of decisions, there's a feeling that we don't want to do that mid-war. And there is a kind of fear in some, parts of Israeli society that is a reason why the war may continue longer, simply because that is in his political interests. The fear that, once the war ends, he won't be able to sustain himself in government, and then he has all these charges in court that he'll have to deal with and could end up in jail.
Is there a point where the U.S. stops supporting the war?
I don't, the U.S. is extremely uncomfortable with the way that the war is being conducted. I don't see a moment yet in which they simply say, halt, stop, and use the tools that would be necessary to make an impact there. You can argue whether they should, but at the moment, I don't see that happening.
But how do you see actually everything changing? Because there's also a number of videos of, possibly civilians getting killed, and the world is probably turning. The world has feelings. Whether they're verified or not is another matter. But is this shifting the narrative on Israel?
Absolutely. This has been, you can win on the battlefield and lose off. And, the story of this war really has been that Israel very quickly lost that public battle. There's a lot of feeling with Israel that this is to do more with anti-Semitism than the rights and wrongs of the thing. But nevertheless, it's clear you've got, tens of thousands of people who've died. Many of them will be civilians. We don't know exactly how many, what the breakup is, but it is really significant, and the suffering is very real, and that plays terribly for Israel.
Mark, if the hostages are released, and again, because I don't know whether you see an end to that actually, or a possibility that is happening, what does that mean for the war on the ground?
Well, if the hostages are released, it will be significant because it will be part of a package. The Hamas will not give them up without some significant concessions on the Israeli side. So that will, almost by definition, it will change the nature of the war, at least for some time. It would involve a truce and so on for a period, probably much longer than the last one that we saw. But we don't yet see a deal coming through on that. You have the International Court of Justice today, of course, which will be giving a preliminary ruling saying whether there is a plausible case of genocide against Israel, which could also play in, because one of the things that they would do if they make that decision is to demand a ceasefire. They don't have the means to enforce it, but they could demand it.
Does a ceasefire mean that the Houthis also stop attacking actually ships in the Red Sea?
That we simply don't know. The Houthis say that this is about Gaza. Once they're doing it because of what the Israelis are doing in Gaza, and that they will finish when that ends too. But we really don't know.
Mark, thank you so much for all of your insight. Mark Champion there, a Bloomberg columnist. Now, U.S. Secretary of State Antony Blinken has also finished his four-nation African tour in Angola, pledging millions in new investments and highlighting strengthened ties with the region.
We're announcing $45 billion in new funding through the U.S. strategy to prevent conflict and promote stability for coastal West African states. With this new investment, the United States will have invested nearly $300 billion just over the past 2 years in stability-focused assistance in coastal West Africa.
Well, let's get more now with Bloomberg's Ondiro Oganga in Kigali. Ondiro, thank you for joining us. So Niger and the Sahel region also in focus. Why is the U.S. invested in the area?
Because they have the biggest drone base in Niger, valued at $110 million. And also they have staff on the ground. Outside of that, they've had operations in Mali and Burkina Faso to restore or maintain some form of security and stability in the Sahel region. And, once coups happened in these respective countries, they began veering away from constitutional order and began drawing closer to Russia, Iran, Turkey, countries that do not have the best track record in upholding human rights and democracy. And this is a point of concern for the U.S. And that is why this region is very, very important to them, because, they are not satisfied with the way that things are working. They've expressed their displeasure. They've slapped sanctions on these countries, but they're sort of handling them with a velvet glove, because the Sahel region is very critical. It's a hot point for jihadi extremists. It's also a hot point for drug trafficking and human smuggling. And these are some of the issues that can cause instability in the larger West African region that is of much more significance to the U.S. in terms of interest, partnerships, and trade.
And Ondiro, Russia's Wagner forces are slowly but steadily making their way into the Sahel. What are the implications of that?
The implications is that they're going to keep gaining momentum, and nobody knows what their interest in the area really is. France has exited Niger, and this leaves a vacuum, though America still has the biggest base. Wagner is creating dominance in Mali, and that's why Antony Blinken seized the opportunity to say that the only partner that has Africa's interest at heart is America. And nobody knows what Wagner Group is really about in Africa. Anywhere they go, problems follow, and they're just exploiting coups and conflict on the continent. But again, U.S. is also working to build stronger ties with other African countries by equipping them with the technology, exchange intelligence, and also military equipment. And outside of that, they'll be considering building another base in Ivory Coast if the base in Niger cannot be salvaged.
Ondiro, thank you so much for all of the updates. Ondiro Oganga there in Kigali, Rwanda. Now, Bloomberg has also learned that Vladimir Putin is testing the waters on whether the U.S. is ready to engage in talks for ending Moscow's war in Ukraine. Now, the Russian president put out feelers to Washington through indirect channels to signal he's open to discussion, including potentially on future security arrangements for Ukraine. Now, U.S. officials say they're not aware of the supposed overtures. Meanwhile, Latvia's president says EU leaders are moving towards an agreement next week over 50 billion euros in aid to Ukraine. Well, he spoke exclusively to Bloomberg.
We do understand what Ukraine needs. More money, we already discussed that, more ammunition, more weapons, and we must provide it. I think it's immoral to speak about some kind of impasse if we are not providing weapons and money, and we know that Ukraine desperately needs that.
Well, we'll have plenty more, of course, on that. Latvian President Edgars Rinkēvičs speaking to Bloomberg's Maria Tadeo. Now, coming up, Telia is one of the biggest followers on the Euro Stoxx 600 this morning, so we'll have more of our exclusive interview with the company's chief executive. That's next, and this is Bloomberg. Now, Telia, one of the biggest losers on the Stoxx 600 today. The Swedish telecoms operator says times are tough in its TV and media business from an advertising point of view. Now, the company reported a loss in the fourth quarter, roughly in line with forecasts. Well, the chief executive, Alison Kirby, spoke with Bloomberg exclusively a little earlier.
We've had a tough time in our TV and media business because of the ad market collapse. But what you saw in the quarter is some of the restructuring and content rationalization that we've been pursuing is starting to have an impact on the bottom line. You know, we need to see it return, but we don't expect it to return until the second half of 24.
Well, that was the Telia chief executive, Alison Kirby, speaking from Stockholm. Also making news, well, UK consumer confidence climbed by 3 points in January to the highest level in 2 years. Well, GfK says households are more optimistic about their finances as inflation slows. It will be welcome news for the Prime Minister, Rishi Sunak, who's counting on a feel-good factor from rising living standards ahead of the general election expected this year. And the JP Morgan chief executive, Jamie Dimon, is moving some of his top lieutenants into new senior roles. Now, the shuffle includes moving Jen-Pip Zak to jointly oversee the corporate and investment bank. Now, the move comes as Dimon prepares for potential successors halfway through his 5-year retention package. And Bank of America is splitting a roughly $800 million pool of restricted stock with the majority of its staff. Well, according to a memo from the chief executive, Brian Moynihan, the incentive will go to workers who earn as much as $500,000 in total annual pay. This as the bank looks to retain employees, even as it works to keep a lid on expenses. And Microsoft will lay off 1,900 people across its video game divisions, including at Activision Blizzard, which it bought for $69 billion. An email to staff seen by Bloomberg said the cuts represented about 8% of Microsoft's 22,000 gaming workers. More than 60 other tech companies, including Amazon and Alphabet, have fired almost 11,000 employees so far this year. Now, the other stock we're keeping an eye on, of course, LVMH. Let's start with Intel first. Bad news first. Certainly it's bad news if you're an Intel stock owner. Pre-market down some 11.4%. On the upside, though, LVMH sales are proving much more resilient amid this broader luxury slowdown. Revenue grew 10% on an organic basis in the final 3 months, of last year at LVMH. That means it surpassed estimates. It did reassure analysts and investors, and you can see LVMH gaining 9.6%. Also, Rémy Cointreau getting a boost from some of the planned cost cuts, and you can see Rémy Cointreau gaining some 13.2%. Plenty more to come on Bloomberg. Up next, the Bloomberg Brief. Danny Berger in London for the very last time. Manus Cranny in New York, and this is Bloomberg.